Hello, and welcome to everyone to Financing Philadelphia's Future with Councilmember Derek Green. This is a live Q&A about creating a Philadelphia public bank. Thanks for joining us today. I'm your moderator, Vanessa Lowe. I co-chair the Economic Dignity Team for Power, Philadelphians Organized to Witness, Empower, and Rebuild. And I also host a radio show on Germantown Community Radio called Vanessa's Money Hour. Glad you're here with us today. So the way it works is you'll all be muted throughout, but we need your questions. Enter those in the chat or the Q&A box, whichever format you're on. I think some of you are on Facebook and some of you are on Zoom. Our host, Kyra and Peter Winslow, are capturing those questions throughout, so please start sending them now and refer to the chat for additional instructions. But here's the thing, the best way to watch this is to set your view to speaker view. That way it's the smallest screen, but you'll get to see who's speaking, and if we have any slides, you'll get to see those also. All right, we don't have so much time, so I'm gonna go ahead and get us started. Let me do the introductions. So our regular is Councilmember Derek Green. He is serving a second term as City Council Member at large. He has a background in banking and a deep commitment to sustainable economic development, particularly for Philadelphia's Black and Brown neighborhoods. He chairs the committees on finance and disabilities. His top legislative priority is the establishment of a Philadelphia public bank. And our guest today is Nicole Levy. She's Director of Fair Lending and Compliance Analytics for TD Bank right now. She's a seasoned financial services regulator with over 15 years of experience in the government, nonprofit, and private sectors. Her first job out of college was as a community organizer with Acorn, protesting the large bank mergers of the Federal Reserve. Interestingly enough, her bank regulatory experience includes 8 years with the Consumer Financial Protection Bureau, followed by time as a community reinvestment and fair lending examiner with the Federal Reserve. Ba-da-ba. So that's very interesting. Maybe we'll talk more about that. But I'm going to go ahead and turn it over to Councilmember Green to get us started.
Vanessa, thank you for once again being our host for this program. It's been always a pleasure to be with everyone every month to give a brief update, but I'm really looking forward to hearing from Nicole as a former banker. It's very interesting to hear someone that has an activist background with an organization like Acorn, which I remember working with quite a bit when we did the predatory lending legislation in the late 90s to where she is now with TD Bank, and also her involvement with that other newly created entity that was started by Senator Martin. So definitely a pleasure to be with her and all of you this afternoon. Regarding the public bank, as I think you all are aware, we've retained Holland and Knight, and we're making quite a bit of progress in reference to the structure of the potential public bank. We're working through some of the legal analysis, some of it very technical and detailed, but I believe we're making some progress in reference to what will become the public bank in the city of Philadelphia. The goal that I have is to work through the legislation through the summer to come up with amendments that we could use in the fall to amend the legislation, and then with those amendments move forward with passage. And then as we go into both the fall appropriations process and also going into the next budget process, we'll have a strong idea of the dollars that we will need to make the public bank successful. I'd also look forward to having those conversations with all of you as we plan for our summit this fall as well. So definitely looking forward to the work we're doing over the summer and moving forward on the public bank so we can ready to put this into operation next year.
Great. Hopefully we're getting some questions in the chat, but Councilmember, do you have an opening question for Nicole?
Well, I did have that opening question. Going from Acorn to working with the federal government on a brand new organization to TD Bank. That's a very kind of diverse background of regulator, private entity, and activist. So give us a little perspective on how your career took a very windy road, as some would say.
Yeah, thank you for that question. That's one of my favorite questions. And also just thank you for the opportunity to come here and be with you all today. So my career has really focused exclusively on the question of economic injustice, right? And how to crack that, how to make a dent in that. And I've really spent the last 18 years trying to look at that issue from the nonprofit sector as a community reinvestment advocate. Spent 10 years in bank regulation, which we could talk about that a little bit later. And then most recently, I've now been with TD Bank for 2 years, where I've been leading up their fair lending department. And here's the thing, the past 18 years of my life, I have been focused almost exclusively on 3 big laws that are focused on trying to move the dial for economic injustice. That's Community Reinvestment Act, Home Mortgage Disclosure Act, and the Equal Credit Opportunity Act. I love these laws. I will fight with them, or fight them to the core. Like we are enforcing them, trying to do a good job. But here's the thing. Those laws have been on the books for about 50 years now. And I hate to break it to people, they're not going to move the dial. They're not going to make the difference. And I think the reason why I'm here today, the reason why I think this conversation is so important, Derek, the reason why I'm so grateful that you brought this bill forward for a public bank, I think that this is the one idea on the table that truly has the potential to make an impact and really close the race gap when it comes to economic inequality in Philadelphia. And hopefully, we can spend some time later today talking about the Phillies budget and how this bank will make that difference.
Thank you. Thank you. That's a good opener. So, Nicole, I know you have a couple of slides. So tell us when maybe we want to show one, but
let me know if you want to talk about anything else. I have one pie chart that maybe I could bring up, and I don't know how people feel about charts and diagrams, but really let me make this simple. What I want to talk about is budget setting, right? And maybe, I don't know, Tim, if you're able to share the pie chart up, we can bring it up now. This isn't a tasty pie, by the way. It's a little depressing. No one's going to eat this pie. There's not a lot of pieces in it for all of us to share. But let's talk about this in terms of something we've all done, like sat down around our kitchen tables, set our own personal budget. So imagine, I've got news for you. Guess what? We are billionaires. We have exactly $572 billion as a city. This is what customers, what sort of residents have, businesses, the city government, right? $572 billion just sitting there in the bank. And what we've done basically is taken all of that money and we've handed it over to big banks, to Wall Street, and allowed them to manage this money. And when we think about, I was talking before about the Community Reinvestment Act and all of these other legislations out there, they really focus on the lending piece. And they ignore the fact of who owns this capital, who owns this wealth. And all those laws are centered around this idea of, hey, how can we ask for a little bit bigger piece of the pie? Can you give us some more loans? But I think the story that I want people to walk away with is we are wealthy as a city. We have a lot of money. There's a lot of opportunity here. And if you were doing your personal budget, you'd say, okay, what's coming in? And then what am I spending it out on? So we have $572 billion coming in. Just 3% of that is what we're spending on housing. Like, imagine if that was you. You should get a bigger house. Like, we could have a nicer house, Philadelphia. We could have some nicer houses, right? I think what's most startling looking at this is the sliver that is completely invisible that goes to small business. 308 million is it. And this is, by the way, I was talking before about those regulations, HMDA, CRA. One of the biggest benefits is that all of this data is out there for public consumption. It's not, you don't need a passcode to sign in to do the city's budget. It's all publicly available. So I think when I think, Derek, about this legislation and about the public bank, it's addressing that other side of the equation that's been forgotten. So many programs have been focusing on the lending side. How do we get more loans? How do we get more of this? But it sort of assumes that, hey, we give all of our wealth to big banks. It doesn't challenge that. But this bill is talking about bringing that money home. And I've done a few sort of back of the envelope budget sketches for the city of Philadelphia. And if we just took 8% of this total deposit base, right, and sort of repatriated it into Philadelphia organizations that are controlled here, suddenly you have a budget that can fill that lending gap caused by racism in residential lending, right? And then also cause the cure or fill that lending gap that exists in small business. So I don't know if this is helpful as a budget picture, but it's like this is the pie of potential for Philadelphia. And you can see such a small portion of it is going to housing and small business. It's no wonder we have the problems we have.
And Nicole, if you could provide a little more background, when you say $572 billion in total Philly deposits, what does that represent?
Yeah, so go out there, data's all public. FDIC, they produce these deposit market share reports that you can pull down from the internet. And it shows you every single financial institution, how many branches they have in Philadelphia, and how many deposit totals they have. So when you look down the list, the top 10 are all big banks. I have to say TD, where I work, we're the #1 deposit holder in the city of Philadelphia. We're also a major small business lender too. But you don't see, and I know, Derek, your background is sort of in community banking. I mean, that's a sad story there as well, where these community banks have been disappearing over the years. And as they disappear, our wealth is increasingly moving to these large organizations where, yeah, they're not investing in housing in Philadelphia, but the rest of this $554 billion, like, what are they investing it in? Large nonprofits, yachts for their shareholders. Let me just, I could kind of riff on this just for one more minute. Like, just imagine this was your money or your mother's or your brother's or something. And they're like, yeah, I've got $572 billion. I'm giving it to this guy, Morgan. He lives out of state. I never talked to him, but he gives me 3% back to live off of. By the way, I have to pay him interest on that. I have to pay for that. And also when I call him up to talk about my money, he won't talk to me. He's created a model, an algorithm to recognize my voice that I have to, it's crazy to me. It is absolutely crazy to me when I think about how we've just taken all of this wealth and completely handed it over to large corporations who frankly don't have our interest at heart. I mean, they're doing their best. We're trying, but I'm looking at questions coming in. I'm paused. I don't want to miss some good questions from the audience.
And real quick, that
all right
includes credit unions as well. So credit unions, all banking entities. Okay.
All right. Let's get a question. Go ahead.
I was just going to say, in Philadelphia, we also have one of the very few minority-owned banks, right? Is another category of banks, and we have one here in Philadelphia, which is a dying breed also.
Mm-hmm.
Yeah. All right, let's get a question from the outside. Kyra or Peter, do you have a question?
So far, the only question comes from Stan Shapiro, and I guess he's asking for clarification to Nicole. Are you suggesting that the Philadelphia Public Bank open itself to private depositors, thus allowing it to make a dent in the privatization of the $572 billion?
I think we should be talking about it. I mean, when we're thinking about any kind of business, the first thing you have to be thinking about is scale, right? How many customers are we going to have? How many products are we going to move? All of that. From my perspective, again, I think there's been a lot of focus on the lending side. But I think once we sort of pen out what is it going to cost to fill the housing gap, what is it going to cost to fill the business gap, then you can back into that and say, okay, well, how big does our pie need to be? And sort of the back of the envelope sketches I've made would say about 8% of that total deposit, which is more than what is the city? The city's deposits are around 522 million thereabouts. So I think we need a bigger piece of the pie than that. But Stan, I think the other thing I'd suggest is that I don't think you don't stand up an institution of that size overnight. And I think there's steps in this process, right? We were just talking about some of the local credit unions, the minority owned banks. Maybe there's opportunities to be partnering with them, to be pushing to say, all right, let's continually repatriate more of these deposit dollars locally. Think about the loan funds, how we're managing them. While you're doing that, you're learning about the infrastructure. I mean, a bank is really, it used to be a vault. But now you have to think about cybersecurity. You have to think about those rails, and that takes investment. You have to buy that stuff. And I don't know that there's a value proposition in buying that stuff for a $522 million institution, right? So maybe there's some opportunities here to partner with some more of the local institutions, build that deposit base, and at the same time start thinking about the infrastructure for the bank.
All right, Peter, did you have a question?
Yes, Nicole, here in Philadelphia, we've had a lot of historical experience with redlining and discrimination in lending. We know it's a complicated situation, and Councilmember Green has spoken about those that are hard to lend to borrowers. Can you talk a little bit about what the current state, since you're a fair lending expert and a compliance officer, can you talk about the current state of affairs in Philadelphia as far as discrimination and the inequities, especially in housing, and also what a Philadelphia Public Bank might do to help correct that?
I'm just chuckling and not in a happy way about this idea of people being hard to lend to. When we think back to the history of redlining, it started with the federal government and the Home Ownership Loan Corporation, and going out. I think we've all seen the maps where they sent appraisers basically and out to neighborhoods to assess the value of neighborhoods based on the racial composition of those neighborhoods. So that's the history of redlining and how it started. But I think, and hopefully in just a few years from now, we're going to be looking back at the credit bureaus like Equifax, TransUnion, and we're going to be saying that is modern day redlining. And those names are going to be as synonymous with redlining as those Hulk maps were of yesteryear. We've created a system where we've provided access to mainstream financial institutions to predominantly white people. And then we've tracked data on them to demonstrate how they are creditworthy. And then people who are underbanked and excluded from that system, who are predominantly people of color, are determined hard to bank. And then we're talking financial, let's give them financial literacy. No, the system is broken. That process of keeping data on predominantly white customers so that you could give them more loans is wrong. It's redlining. And I think when we are talking about starting a bank that is the master of its own assets, we can begin making decisions and informed decisions about credit risks in our neighborhoods. We could talk about, I know there's been lots of information in the news lately about the biased appraisal processes, right? Systemic issues, evaluating property in communities of color. And I think then we should, if we're talking about these kinds of issues, you just have to be talking about judgmental underwriting processors, and that you still have humans, mortgage loan originators, underwriters, who just like me, just like everyone, are prone to implicit bias, and those kinds of systems are going to favor white borrowers. So I think what this bill is about is building a new bank that is owned by the city and works for the city. And I think these are solutions that we should be talking about.
Thanks, Nicole. I'm not seeing any signs from Kyra or Peter, so I'm going to go ahead and ask a question. Kyra or Peter, send me a chat or let me know if you have any questions coming in.
We do have a question.
Okay. All right, go for it then.
From Stanley Pokras. I apologize if I messed up your last name, Stanley, but his question is, can we market the public bank to the large city institutions like the universities as a place to deposit their long-term savings?
That's a great idea. The one thing that makes me think about is, and we could talk about the Community Reinvestment Act. I know years ago there were movements to sort of tie city or other large institutions' deposits to the CRA performance. So basically all banks are required they're evaluated on an incremental basis for their performance in lending into low and moderate income communities, and they get a rating. We can talk about the utility of that rating forever, but they're given a rating, right? And the idea would be, that city governments or other people would only house their deposits at institutions who demonstrate it. That and I think those are great ideas. I think there is some teeth in these regulations that are out there that we could be making better use of and leveraging more to our benefit. Yeah, that's a great idea, Stan.
Peter, question, or Kyra? I want to get all the public questions out there for sure. All right, so I don't want to go into too much detail, but the Consumer Financial Protection Bureau, still a fairly new agency. In your time there, and maybe sort of, maybe following it, hopefully you have been since, what do you see as maybe sort of some of the biggest challenges of them being effective at sort of managing and ensuring that these large institutions are truly serving the community? Just any insights you have. I'm nervous about that.
Can we have a weekend getaway? I know Derek's going to the beach. I think we're coming with you, and we're going to take this conversation there, because that's a big one. Here's what I'll say, just to make it brief, though. Instead of talking about the challenges, I think that one of the biggest benefits of the CFPB, one of the best things they did, is they made a customer complaint portal publicly available, where customers can go on and complain. The article today in the New York Times about overdraft practices of these institutions, right? I think we as advocates, as a city, could be making better use of that data to hold these institutions to account for some of their practices. And maybe you were talking about I guess we were talking about the idea of tying deposits to CRA performance. Maybe there's something there in complaint performance that we could be looking at as well.
Yeah.
I'm kind of curious, a question. I don't know if I can ask a question of the council member.
Please do.
This is, I mean, I've been passionate about economic injustice for a long time, and I really think you've landed on a real true solution. I just be curious to hear a little bit more from you in terms of how you got here, how you sort of came to realize that a public bank is the answer, and it's what the city needs.
Well, that takes another visit to the beach for a whole nother
Let's go.
But really, actually, it's interesting considering your talk about Acorn. And prior to me working in city council and becoming an attorney, I worked at Meridian Bank, a small business lender. Really saw redlining up close and personal, and the impact it had. And the community of North Philadelphia is called Garment Square. Broad and Glenwood, and so seeing the level of disinvestment, and because at that time we actually had lending authority, so I could do a loan to someone based on my knowledge of their ability to handle that loan. We did some really creative things like, okay, you don't have any credit history, you have don't have collateral, so this is what we're going to do. I'm going to do a $1,500 loan. I'm going to take that $1,500, put it into a CD, and we're going to use that CD to collateralize the loan. Now, we weren't supposed to do that, but I was being creative as a way to start to create some type of credit record. So you would pay back on that loan over, say, a course of 6 months to a year, give or take. But now you've at least started some type of credit history. Then we'll do maybe another loan without the CD. And now we just do a traditional loan to now start to establish credit. And we also were creative in how we did things with our customers and also our businesses, because we knew the type of deposits they were bringing to the branch. So I'm thinking of like Tommy's Men's Shop on 22nd Street. I'm thinking of my father-in-law's along with us had his first auto body shop at Twins, Indiana. So it was a number of different businesses that we had in the community that we were able to give a loan under our lending authority, because we said we knew this person, we knew their ability to manage their bank account, and they didn't have a lot of overdrafts, but always kept dollars in the bank, but they didn't have a real lending portfolio, they didn't have collateral. So we did that because we had lending authority under our names and we were willing to take a risk to provide that type of loan. But when lending authority changed and they brought in FICO scores and all this other modeling, which goes back to some of the issues of redlining and putting together a profile based on certain characteristics, that's what really created that disinvestment. And for a number of lenders, people that liked lending, they kind of left the business because your loan portfolio reflected your community. So someone like a Gary Coster at One Island, he had a very multicultural loan portfolio. Tina Brown was at Broad and Walnut. Think of Geraldine DeBerry, who was at Overbrook Ranch, or Lynn Turkington at Rittenhouse Square, or Malvin Reyes at Fifth and Wyoming, or Don Gilbert at 66 in Woodland. I do have a memory of all his names, just kind of flooding back. But their loan portfolios reflected those communities, and they had relationships with people in the community. And your banker was someone that was part of your community, like other business owners, and you helped to grow your neighborhood and on commercial carders and other organizations. So I could talk for a long time about that, but I'm going to stop. But that was kind of the genesis of why we need to provide the city as a way to help do that same dynamic to help businesses around the city of Philadelphia.
All right, it's 4:57, so we need to start winding down. Is there a final question from Peter or Kyra?
Yeah, I think there is a very appropriate question from Tim. Picture it, it's day one for the public bank. It is now in, it has now been established. What projects are you looking to take on first?
Is that for me, or are you suggesting that for Nicole, what she would think?
I guess it's an open question at this point. Or what would be one of the first initiatives for the public bank to tackle?
Well, I know one of the first.
Oh, go ahead.
No, you go.
Yeah, I think that the most important thing for a public bank is accountability and transparency. And I think it's just amazing how much when you are a public, like this, but it's all available online. Like we can see it. And I think one of the biggest benefits of this bank is one, just owning our wealth and using it as we need to as a city, but also bringing the whole city together around this and sort of creating that sense, this is our money, we are the economy, and here's what we're doing it, and making sure that you have a lot of broad public engagement and activity and eyesight on there. And then frankly, that's also just what's needed, because I think one of the biggest risks people have when you talk about a public bank is, oh, insiders or corruption or this or that. So I think the day one thing is like, this is all about transparency. Here's our open books, and here's how you read it public.
Thank you, Nicole. Councilmember Green, you want to respond to that before we shut down?
This Nicole. Is your last name Winslow? Just curious. That's an inside joke. No, that's a conversation that we've been having quite a bit about the need for transparency, because you have a number of people that when you say the city is creating a bank, there's concerns of what's going to happen. So the transparency, and even how the board members, and that's some of the stuff we're talking about through our work with Holland Knight to try to make this entity as transparent as possible for the public, so we could try to achieve the goals that we're trying to meet.
All right.
Well, thank you for having me. This was a lot of fun.
Thank you, Nicole, for being with us. Thank you, Councilmember Green. Please join us at for next month. We do this once a month. And we'll have Jim Burnett he is the Executive Director of the West Philadelphia Financial Services Institution. Very excited about him. He's actually an old mentor of mine. That's July 27th, same time, same space. And again, thank you all for attending. Here's the thing, if you'd like to get on the list to receive these press releases directly so that you can join us, leave your email in the chat, all right? Thanks for joining us.
Thank you all.